There we go. There we go. All right, recording. So with Unity, let's do a fib on Unity. I just did a quick trend line to indicate that it is downtrending. As you can see, it rejected here, again here, so it's going down. It needs to break this to really get out of this trend. As far as fib, I will do a retracement starting from 210, which is the most recent high. I'm gonna go back to.
Now, do you go all the way to the top of that wick, or do you go the top of the close of the candle?
I'll start at the wick, the top of the wick.
Okay.
I'm gonna go down to, let's see, I'm gonna go to 76, which is kind of far. The low. Yeah, I'm going way down because you never know with this market. It could touch. I don't prefer yellow. I like blue with this. So right now our levels are, 210, 180, 181, 158, 143, 127. So right now we just broke that 143 Friday, right? The stock RSI is pretty low though. We're at what? 0.57, is that right?
So it's 129.
Yeah, we're really low. But based on these candles, it looks like it's gonna most likely touch that 127, 129 level next week at some point. So the VWAP is 141, which is broken. That's not good. If 127 doesn't hold, you're looking at potentially, 107 within a few days after that. But in between, my point,
around 100. Sheesh.
Yeah, but now the fib, this is a good baseline fib. But for me, this is not enough because there's a lot of stuff. There's a lot of, between 210, for example, and 181, a lot happens in between there. Right. So you want to find your own resistance in there too. So what I do is I'll look at other multiple rejections. So in this case, we see here that 196 rejected on November 12th. We see 198 rejected November 16th. We see 198 rejected again the next day, the 17th. We see 199 on the 19th. So this, this 198, 199 level is another resistance point that you can draw.
Right.
We both do a horizontal line. You can make a line for that right here because we see this rejected, 1, 2, 3, 4 times within that 5. So that's a strong resistance, So right there we mark that. And now for my own lines, I make them a different color. This one I'll make purple. So the blue I know is a fib. The purple is what I've done. So now we got something else in between there. If you're day trading it and want to find an exit point, when 197, 198 comes, it can potentially reject. That's one. You even got another one in here. 189 rejected here. 189 rejected here. So out of those two, we see rejections. See if we got any more in the past. This goes back a little further.
You see that consistency of the dip, like it's like it goes up and comes right back down to that same area.
Exactly. So here we're a little lower. So this is actually all-time highs. But even there, being that this is recent, I would make yet another line right here at 189. Now that's only what, 89 to 96, $7. But for what I do, $7 is a lot.
Hell yeah.
That's a scalp, so I need that. Now, if some traders may say that's excessive, why are you making all these extra lines? It depends on your strategy. If you're a long-term guy who doesn't really care about what goes on between the fibs, leave it as is. For me, I want as many as possible because I want to be able to get in and get out and know where the next resistance is. No matter how strong or weak it might be, I want to know. And that's telling me right there, that's another resistance. Another one. So we're at 181 now. This is decent, but here we got support a little bit here. So here we got support at 185, 183, 181, rejected at 175. So here's a little gap. We're gonna try to find one in here. 177. So in this case, I need to drill down now because this is not tight enough for me to get a a substantial support or resistance. So I'm going to drill down to maybe the hourly and go back to this time frame, which is between November 22nd and November 10th. Between that time, I'm going to go hourly and see what I can find. But this is how you break down the fib in addition to your own stuff. This is what you do. So here we go. Okay, now I see a little more now. So here we got, it looks like this level right about here at
what's those arrows you got on your screen?
These arrows are super trends. That's an indicator on Webull. The super trend indicates when the trend for a given time frame is broken. And it tells you which way you're going. So in this case, with the green arrow, the downtrend was broken with this EMA cross.
Right.
See this? So the 9
okay, I see it.
Crossed the 20 right here. During that hour, you went from 173 to 182, which is pretty big. It went up 3% in an hour. So when doing that, it broke that previous downtrend. When it broke, the downtrend was broken. If you see super trend up here, the super trend at that time was 180 and 53 cents. So once it broke that, the super trend went off, saying, "Hey, we broke the downtrend. It's trying to get in calls," and that's why it went off.
Okay.
Yeah, and the same thing here. When it broke it didn't hold it though. It broke it. It got to 183, which is actually another resistance I can draw, and then it pretty much went right back down. It rejected there. So now we have a down super trend where it broke the uptrend. The uptrend lasted for a few hours, and then back down we go.
That's where you buy puts, right?
Right, that's where you buy puts. Exactly. This was a big drop here. We dropped from, in that hour, it was at 180. This is at 8 o'clock that night. This is after hours. If you see the time down here, it's 20 hours. So it's 8 o'clock. So that's after hours closing. So it closed that day at 182.80, as we see up here, 182.80 right here up there, and then the next day it opens at 175. So it dropped $7 overnight.
Tickets.
Sorry.
Yeah.
Oh, who is that? Oh, somebody still. But so by dropping overnight, if somebody bought puts, let's say overnight here, you would have broke up $7 in the money. If you bought puts there. But at this point, if the super trend just went off, I don't think anybody saw that coming. But yeah, when the super trend goes off, this is more useful on the shorter time frames, more so than the longer ones. Another one here, this is a nice cross on an hourly. You hit the trend line at 187. The EMA 9 tried to cross the VWAP, it could not. And then here we break the uptrend yet again when 187 rejected. And we went down all the way to 165 that day on the 29th. So that was a nice cross on the downside. And this is a perfect cross right here. You see the hourly is this high. See how high it is? The stock RSI is at like almost 100, it's like 90. And it's crossing. Right here was a great opportunity to buy. At the same time,
you would wait for that second confirmation, that second candle?
I would buy it here. Right, exactly, right here. Within this hour, I probably would have bought it like right in the middle here. Because you can see the stock RSI, that's a sharp cross on the downside. The MACD is also crossing to the downside. And then the stock RSI fell off a cliff. It was up here at 65, and then boom, we're down to 48. Right. So all those indicators lined up along with the cross, it's all there. It's all written. You just got to know what to look for. And this is what you're looking for. Now, this happens to be an hourly time frame, but even whether it's an hourly, whether it's 3 minutes, for day trading, I like 3 minutes. And this is another one here where we hit a resistance, which I didn't even have mapped out. I got to go drill down more here. But another one where we crossed here, and the rejection is actually up here at 146. But when the stock RSI is this high, and you see this candle here, this is a bearish engulfing candle, meaning the previous candle was green. You got a pretty much almost a gravestone here. That's a bad doji. Rejected 146 there. It tried again, failed, tried for a third time. So within this 10 minutes, it tried and failed, and then that third time, it just completely, it was exhausted. The stock RSI is high, and with the 3 minute, it's gonna come back down. It's not gonna stay up there for long. I'm echoing now. It's gonna come back down. It's not gonna stay up there for long. So we see the cross on the stock RSI here, along with this engulfing bearish candle. We see the EMA is about to cross. Didn't quite cross yet, but that candle is telling it all. The MACD is also starting to cross. So once again, all these indicators lined up: stock RSI crossing, MACD crossing, RSI falling down, way down. You're in puts. Another one. Another opportunity here where we crossed up, rejected. This is an EMA cross on the upside. This is very tight though. So on a day like this, if I saw 146 reject, I probably wouldn't buy calls again until I saw it break that. I'd be in put mode until I see it hold this VWAP. So here we are again, across to the upside, rejecting, stock RSI is up there again. Wait for that cross. We see we're still bearish. It tried, and then everything crosses yet again. The stock RSI crosses, MACD crosses, RSI still heading on a down trend, and here is our actual cross. Perfect. Boom. Get in, get out. And this is what I do all day. Looking for these rejections, looking for these sharp crosses that are lined up like this. It's almost it's a gimme. Very rarely will you see this reverse when everything is lined up like this. It's going that way. Now I may be in this, this dropped what? From 142 to the low was 140. So that's only what, $3 in this stock. But $3, I may have gotten out with $1. I probably would have got in at 142 and got out at 141. But that $1, that's all I need. That's it. Now here, the EMA 9 crossed everything. It went below the 20, the 50, and it even crossed the 200. Now, a lot of times you'll see sometimes here, the 200, it can actually bounce off this and go back up. In this case, it was so weak, it did not. It kept going down, 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 down to 39. I probably would have sold around here, right by the 200, because I don't want to risk it bouncing back up. I've seen that time and time again. But in this case, it was very weak. It kept going down. So another good one that you see when the stock RSI is this high, you may think, oh wow, we broke the EMA, we broke the 20, but you see the cross is not there. There's no cross. Although it looks bullish, it bottomed out here, it came back up, but there's no cross. And when there's no cross, the EMA 50 is right there. The 9 has not crossed the 20, which is mean we're going to have an EMA. Anybody want to answer for me? This is going to be an EMA.
Fake out?
Not a fake out. Somebody got to have it. Come on now. If y'all watch the other videos. This is a EMA cross. Starts with an R.
Rejection.
Yes. Thank you. This is a EMA cross rejection, classic rejection. Why is it a rejection? Because the stock RSI is way up here. We can't stay up there for too long. It's gonna come. What goes up must come down. We rejected the 50 EMA. The 9, if it's this high, and the 9 has not crossed the 20, 9 times out of 10 you're going to reject. It is kind of a fake out.
Plenty of times.
Right. 9 times out of 10, it is going to reject on this cross. If you got in here for a quick scalp, great. I probably wouldn't have, honestly, because I didn't see it cross yet. But being that it's so high and we still haven't crossed, I'm not sold. If it's this high and we had crossed, I would say, great, we're going up. But there's no cross here. We're right at the tip and boom, back down. So if you got in here, this was like probably the perfect candle to get in on because the rejection occurs right here. And because right there is where we cross back down. The MACD doesn't even cross this time. It dips, it doesn't cross. The RSI dips along with it. So in this case, you got 2 out of 3 because this isn't fully dipping. This isn't crossing, but you got 2 out of 3 dipping. I'll look at stock RSI even more than I do at MACD. But from seeing this time and time again, this is a classic rejection because for me, the first thing is the stock RSI is too high and the RSI is only at, what is this, 50, 48, 50, 53, something like that. It's barely positive. It's right at the middle. So it's trying.
When it's like 30?
Say again?
I mean, well, close to it. And you want to buy it under 50?
Right. When a stock RSI is under 50, that's essentially, it's neutral. Right. Bearish is really 40 and below for me. Okay. 40, 30. Here you're right at the cusp. But the tiebreaker for me is this. Right. Seeing the stock RSI this high, seeing that rejection right at the EMA 50, I'm like, okay, puts, because we're rejecting. And I'm in and out before that closes.
I got a question.
Yep.
Right there where you were, you're pointing out the 9 does not cross the 20.
Right.
And you're calling that a rejection.
Correct.
You would have bought in there because I wouldn't have until the 9 crosses the 20. I never would have pressed the go button.
I would have bought puts here because I see that it's not going to cross. It's going to reject because the 50's right here. The stock RSI is way too high. I was like, we're going down. We're not passing that. It's too high. It's got to come down. And we're rejecting right here. So by seeing that and the RSI also falling, I'm getting puts, especially with this candle. I'm getting puts. And I'm out right here. I'm out right here. A quick scalp, 2 candles, 6 minutes. And really the key for getting in this candle to be safe, if you want to get in a rejection, you want to see it break the previous candle's low. So in this case, buying the put immediately up here would have been risky. You want to buy it when it breaks that low, which is like right here, which is the low in this candle was 140.40. That's the low, 140.40 for this candle. So once this candle breaks below 140.40, and at the same time I see the stock RSI is also crossing down and the RSI is falling, I'm in. It broke the previous low. So I may ride it for maybe, it might be, in this case, it's a 3 minutes, so maybe a minute or two, 90 seconds.
And that would be a bearish engulfing, right? Right,
that's bearish engulfing, and you're getting puts. Now, somebody a little riskier, you could get it that good and getting at the top. But I always like to wait for confirmation. In this case, the confirmation is breaking the previous low, along with this stock RSI cross below. So being that it broke below that previous low right at this point, I say I'm in, out.
As long as you have 30, 40, 50 of them, you're okay.
Right. Even one, you're going to make a couple dollars. You can get by 1, 10, 20, whatever you want. Yeah. It don't matter. But in this case with the 3, this is called channeling. At this point, the stock isn't really going anywhere. We're hovering between here and here. And we hovered there for quite some time, as you see. It barely broke below that. So there's a little boring, especially with a stock like this. It's only $1. If you look at the range, it's moving up and down between 141 and 139. So it's not much there. This is why I like Tesla, because those same 3-minute moves are dollars, lots of dollars. Or for example, here, Tesla went from, let's go to yesterday, right? Yesterday morning was actually better. Yesterday afternoon was kind of boring. Let's go to Tesla yesterday. In the morning was crazy. Yeah, here. Whoa, what just happened? Zoom out. Let me go back. Okay, 5. I want to go back to 3 though. Okay, there we go. So yesterday morning, Tesla. Some people got burnt. I got hit one time too, actually, yesterday. It got me on a call. Tesla was all over the place yesterday. But let's start. So yesterday, what happened? In the morning, the CPI data came up. Everything started popping. Tesla actually tested like 9, I want to say 70. Yeah, 972 in the morning, 4 in the morning. Before the CPI data was out, Tesla was at a low of 972. Right? Then the CPI data comes out around 8:30, I believe, and boom, we go from 972, we're up to 1022. Oh wait, we might hit 1100. Yay! Market opens. Now in this case, like we went through before, I would not buy calls until I see the pre-market high broken. And in this case, the pre-market high is 1022. So for me, at market open, no calls until 1022 is broken. You might miss some dollars in between there, but that's okay. Now, if you look at this chart before the market open, you can see that, okay, we hit that 1022 and we're trending down at market open. So when the market opens, boom, we test 1015, that rejects. And at the same time, you get a nice cross here, crazy cross. And from here, we drop from 1015 to 10 or to 996 in the first, 3 minutes of trading. But at that point, it bounces, it plays around, bounces here, back up to 1011, bounces back down to 993, back up to 1008. So here it's playing games, because it knows it's Friday. They're trying to burn calls, inputs. So at this point, you don't even enter. Even though the cross is there, it rejected every time. You want to see this level completely broken. So the point to enter puts really, even though we've already crossed, would be here. Because here it's too rocky.
Yeah.
Too rocky. You want to see a nice flush candle. These are a bunch of dojis and hammers.
Yeah, people, right? Yeah.
Who's that? Okay. So you got dojis, hammers here. You don't want to get in here. Even though the cross is there, the stock RSI is also very low. The MACD is also very low. So at this point, we're completely oversold. Completely oversold. But puts were good, I would say, at this point. You could have got in here. It was risky. If you're watching a 1 minute, this is a 3 minute. On Fridays, I don't use the 1 because it's a little bit too risky. 3 is much safer. On the 1, you probably could have got some easy puts on the 1. But the 1 moves very fast and it can reverse on you very fast. So definitely on a Friday, if you're doing same day expiration stuff, I would not recommend the 1. It's playing with fire. Because the one time I did lose on Friday, the big loss I had was on the 1. It reversed on me way too quickly, and I couldn't recover. I did recover, but it was a bad loss. But the 1, even here, on this 1, this was perfect. We start here 1015. You got the VWAP right here. You see the EMA 9, very choppy, but it's still downtrending. The EMA 9 actually crosses the VWAP here and the 200, but it's still popping back up, So at this point, if you see the 1, channeling like this, you don't want to get in. You want to get in when this resistance is broken, which in this case, would be here at 993. Once 993 is broken, that channel from here to here, that's a channel. Let me change it to yellow so I can see it. Here, make that yellow too. Right, so this channel between 1011 and 993, here we are bouncing back and forth. People are buying calls and puts crazy. They're faking them out. Boom, we drop, we broke it. This is what I mean by confirmation. This chart is all over the place in the morning, and it's very tempting to get into Tesla early because it's moving so fast. I want to get it. I want to get it. I don't want to miss it. I'll miss it. But on a day like this, they're killing everybody. They're down here, up here, down here, up here. So you can't hold this stuff. Look at this in 1 minute. If you bought puts here and held to here, this is a 1 minute chart. You crossed here, you're about to cross here. If you bought puts within here and you're still holding, it hit a low of 996. If you didn't sell 996, boom, you just bounced to 1011. You just went up what? $15, $14 within 2 minutes, and you're still holding. So now your put is shot. You're like, oh man, I'm gonna lose. Let me sell it. Boom, they bring it back down. And here we are, 993 again, bounced again, back up to 1008. So like I said, this 1 minute, especially on a Friday, don't do it. It'll kill you until you see a really nice cross, which we got here. This was perfect if you want to use the one, but this bouncing stuff, nah. This is where the fake outs get you. Now when we finally broke away from the VWAP, see here we're hugging it in the 200. We finally had a clean break, and this is where you really want to get in. Once you break that previous resistance here, puts all the way down to, I wouldn't have waited tonight. I would have got out here. 984, 982. Because even that, once that stopped, it bounced right back. My point is, don't use the 1 minute unless you're really, on your toes and you get a clean break like this below that previous resistance. Don't use 1 minute on a Friday. Use 3 or 5 at least, preferably 3. 5 takes too long sometimes. But 3 is the best, in my opinion. Back to the 3 though, because I really want y'all to use the 3. Back to the 3. So here we got our cross on the 3, perfect cross below VWAP. You could have rolled this down all the way down, and got out. Now another thing with these, when you get a nice long candle like this on a 3, get out. Get out. Tesla just fell 14. Let me see, 104 to 84. So $20. It fell $20 in 6 minutes. So if you got some in the money puts at say 1,020, 1,050, even 1,000, even if you bought 980s, you made probably over 100% in 6 minutes, easily. The resistance is coming. Get out. Sometimes people, you buy these puts or these calls, you see the nice long candles and you get that euphoria. Oh, I want to hold. I'm going to let it ride. See how low we go. No. Get your money, get your put, make your profit, and get out while it's going down. What you don't want to do is try to sell it after it bounces, because now your premium is shot. You're like, oh yeah, we're going down. Yeah. Boom, got them. We're going back up. Your put is shot. So my mantra is to sell on the way down. Don't wait for it to hit a resistance point before you sell, because at that point you might not be able to sell. Like when I got caught up on my call, I was trying to sell. I mean, on my put, I was trying to sell, and it reversed so hard I couldn't sell it. So I had to sit there and wait for it to hit a resistance before I could really get a sell. You don't want to do that. You want to sell on the way down. You want to sell at 20%, 10%, 30%, whatever you're comfortable with, but do not let it hit these resistances, these points. You want to get in and get out, and then do it again. Everybody wants to hold these calls and puts for 100%, 200%. That's very risky, man. Very greedy. I'd rather make, like I always say, I'd rather make 10% 100 times,
right,
than try to hold for 100% on one and then lose 100% the next one, or lose 50% the next one. What's the point in that? Just be consistent. Get in. Scalping is all about consistency and getting in and getting out. If you want to hold stuff for a long time, buy contracts that are 6 months out and don't even watch it. If you really want to get 100%, that's the safest way to get it. Buying weeklies is not the way to 100% profits per trade. You want 10%, 5%, 10% per trade. That's all you need. And sometimes I don't even get that. If I buy 100 contracts or something and it moves up $1 or $2, that's all I want. It may drop. In this case, it dropped $14. You got lucky. I only need $1. So for me, I'm selling this probably here. I'm not even waiting for this. I'm not waiting. I got my drop. I'm selling. Boom. I'll wait for it to hit again. Another 90 seconds out. That's it.
I just want to point out that for me, I learned from you that the freaking open interest, as long as the open interest is extreme and high, they will sell right away. They sell right away.
No doubt. I'll show you that right now too, especially with Tesla. These things be in the thousands. As long as you got open interest in the thousands, you'll be fine. You don't want something with a couple hundred. With Tesla, for example, it has a lot of what you call liquidity. So let me share my other screen. Actually, that's a good point. Let me go share. Give me a second. Stop this share. I'm gonna share the open interest screen. Actually, I could drag it over here. Hold on. 1 second. There. Okay. Yeah, I'm gonna drag it over there. So here, I can see this, right? So here, we're looking at open interest. This is yesterday. Even if you're not, I don't recommend not being in money if you can't, but if you're not in the money, look at the 980s. You got 43,000 in volume. Open interest 4,700, decent. 1,014. You want outliers. This is an outlier. The open interest is 14,000 compared to, 2, 3, 8, 5. So this is a good put strike if you're trying to do puts. Another one. Even people were buying 900s yesterday. 23,000, 950, 18,000. So you definitely want, even if you're not in the money, you can still make money off of high open interest movement. As long as the movement is there and there's no stagnation, you can buy these contracts. You can buy. I've made money off $900 contracts. If you buy 10 of them and they're 50 cents a piece, and you get a move from 50 cents to 75 cents, that's $250. You can get that within a minute in Tesla easily. It's just the movement has to be there. Same thing on the call side.
I feel as though I do with Apple, because it doesn't move like every time at $1 or more. Right. It has like these 30, 15 cent, 40 cent pops. And exactly. I just learned to just study it so I can know, like, my execution. Because I've seen, like, let's say out of the monies be like $20, but the high interest would be there. So I'll go there and buy, 5, 10, and I'll just make the flip.
Exactly. And even with Apple, they had crazy, even more than Tesla. Look at this, 180 this is December 17th. Almost 60,000 open interest, 50 cents per dollar for the delta. So even if it moves, if you buy 10 of these, that's $3,000, right? If it moves from $3 to $3.10, your $3,000 is 3,100. It's not a big profit, but you got something. It's not 10%. That's about 3%. But for somebody like me, if I buy 10 of these or 100 of these, and I go from 3 to 310, all I need Apple to do is move a couple cents. I don't even need $1. Give me 25 cents. I'm in and out. 25 cents is 25% of 50. So in this case, that's what? 12 cents, 13 cents. You're getting 13 cents per contract times 10, $130. Times 100, $1,300. That's so. As long as that interest is there, the money is there. It's just a matter of when you want to get out. Are you comfortable with your 10%, 5% gain, or are you greedy and you want 50%? You want 80%, which you can get if you hold. Like I saw, even you, Tony, you had an Apple yesterday. You made what, 60%, something like that. You had a good one.
Yeah, it was 60%. So basically, it was like maybe like $20 per contract, something like that.
Right. So you did good. For me, I wouldn't even held that long. I would have been out probably 20%.
It was more so like a lotto play. I was just like, look, let me just buy this joint. It's around like 330, 340. I was like, and just see what happens.
Right.
And actually, you know, it
It
popped because
popped. You got
it
it.
was
Yeah.
moving sideways. It kept
Yeah.
moving sideways.
There's a lot of stagnation yesterday afternoon. Quite a bit of it. But hold on. But yeah, something like that, man. Get a couple contracts, 30% is excellent. A lot of my, like I said, most of my contracts don't even get to 10%. I'm out 5%. But I do it 30, 40 times a day. So
I'm glad you said that because I
yeah,
used to feel bad when I used to only get like, you know, maybe like 5-6%.
that's all I
Me too.
need. That's all you need, man. But like I said, if you're doing it multiple times per day, it adds up.
Yeah, and then you just compound it month after month after month, and at the end of the year,
You up. a fund or an ETF is not going to get you 5% per day.
I mean, they give you 5% fight for the year.
Per year. They'll promise you 6. If you get 8% to 10% on a fund per year, oh, you had a great year. You
and
can
then
do this.
they want to take 1.5% fee for that.
Right. They want the management fee. You can do this. You don't need them. You can do this stuff yourself. Just scalp here and there. You can grow your account. Even if you grow your entire account 1% per day, this is your account value. You will beat them. They can't do it, and they won't do it. Grow your account 1% per day with these little 5-10% trades, and watch. Give yourself 6 months, a year. See where you land. You'll be way up. It don't sound like a lot, but over time,
I think that's where, you know, I'm sorry to interrupt,
Yeah.
but I think
Yeah.
that's what most traders think about. They think about these big giant gains from options, but they're not thinking that, you know, 10% every week or every couple of days can build. You just
That's
got to take your time
huge.
and be patient.
Exactly.
Just be patient. That's all.
That's all it takes. Whether you want to scalp, whether you want to swing, like I said, scalping is my thing. I like to swing too. This is my thing. Even if you want to swing stuff 6 months out, if you got to wait 3 weeks for a 10% return, that's okay. The fund wasn't going to do that for you. They want to give you, they're not going to give you 10% return in 3 weeks. You did that. So I'm not saying don't put your money in funds, but my point is you got to take control and learn this so that you are in control of your destiny, not some fund. The fund is a safe haven. You know they're going to grow every year. They're going to give you some return. But with this, when you learn these concepts and how these crosses work, how these supports and resistances work, you have total control of your financial future forever. Nobody has any control over this but you. You control when you get in. You control when you get out. You control what you trade, when you trade, how many contracts you trade, everything. There's no outside source affecting you but you. You are your own, you are your best friend, and you are your worst enemy. It's all, you got to cut the emotion out, learn the technicals, and which I've been trying to, make a little bit simpler for everybody. And once you get the technical part down, I'm not going to say it's a cakewalk. It's not a cakewalk, but it is achievable. I always say anybody can do this. If you apply yourself and study these concepts, anybody can do this. Anybody. It's all on you, but I love it. I love options. I'll never, it's probably my second most favorite thing other than working out. This is probably my second most favorite thing to do. It is. And it can be addictive not to a fault per se. Everything in moderation. I do it pretty much every day, just about, but some days longer than others. But it's fun. It's like watching a movie, looking at these charts, and when you understand exactly what's going on with these crosses and these rejections, like this perfect rejection. What is this? 3 o'clock? Oh man, let me go over this. All right, look at this. Classic. Here we go. Tesla's dropping. It's dropping. Have we crossed yet? Barely. But where's the stock RSI? Way down here on the 3-minute. Remember, it's not going to stay down there too long. So this is a 3-minute interval. If you get a 15-minute interval, it can hang down there for a while. The 15, look at this one. We hung down there from, what is this? This is an after hour. It's not a good example though. Let's go back to regular trading hours here. So the 15, when the 15 is low, it can be there for, hour or two. You don't want to be down there on the 15. But on a 3, when you're down there, where's that rejection? I think I was at 3 o'clock. I want to go back to that good rejection here. You're not going to be down there for long. You may have been there for a few minutes, 15, 20 minutes. And as long as you time it correctly and see that rejection happening, you're golden. That's not the reject. This is it right here. This is the 1242 reject. So here, this is a cross. It is a cross, but it's not really confirmed because of this stock RSI is so low. The MACD is already bottomed out that are already crossed. So you had two nice crosses actually 1-to-1. Here we dropped below. I probably would have gotten into this candle and got out in the same interval, meaning I would have got in. See this resistance? This is 1,009. So once this candle breaks that previous low, 1,009, I'm in. I'm riding it. It hasn't even crossed yet, but I'm in just because of knowing how to read candles. Reading candles is just as important as EMAs, which I'm gonna start doing more of that as well. But when you see this candle break that previous resistance, we're on the cross. We're already bottomed out, so it is kind of risky. But you see the stock RSI falling, nice long engulfing candle. I'm in. Once that 10, what is that low? That 10,009 breaks, I'm in. Riding it down. Now I'm gonna ride it down before it hits. I'm gonna get out before it hits the EMA. I'm gonna get out before it hits that resistance. So in this case, I'm riding this down from 1,009 all the way to probably here, because I want to get out just before it hits that line, because it has a potential to bounce once it hits that green EMA 550 line. So from 1,009 to 1,005, $4 move. $4 move within that 3 minutes. I'll probably walk away here somewhere. $2, I'm out. In and out. Because I don't want to hit that line. I don't want to hit this resistance. Now, it very well could have continued and gone below that and hit the 200, but I'm not waiting for that. I'm comfortable. I'm content with my $2 move, even though it was $4. I'm out at $2. I'm selling the bid, taking what they give me. I'm out of there. And I'm waiting for it to bounce because I know this is not going to be down here too much longer. Here we are. We start bouncing. 1,004 support, bouncing. Here we are. The cross is here, right there, just crossed. But once again, we crossed, and we're on the way back up crossing, which means we're really rejecting. And it's no. If this was still red going down, I would say continue. If the stock RSI was still high, I would say continue. But it's not. It's too low, and this is 3 minutes. When the 3 minute is this low, it's only a matter of time before you're gonna bounce. And here it is starting to curl. It's trying. That EMA 50 is holding nice, and boom. They bounce off 1,005. Here we are back up all the way to 1,020 within, what's this? 1245, 1248 to 1312. So within that half hour, if you're still holding puts, you're burnt because you got greedy. Because you didn't sell, like I say, sell on the way down. Sell on that long candle. Get out before it even closes. Don't hold. Yeah.
And on that particular candle you're using, the EMA is about to touch the 50, and you're saying get out before it touched the 50.
Yes.
If it was another EMA, say a 20 or a 200, does the same thing apply?
Yes. Yes. Any EMA you see coming up, get out.
Okay.
Because it can bounce. You don't want to risk holding through. Now it can break it, but sometimes it won't. Like here, it tried 1, 2, 3, 4 times. Within 12 minutes, it tried 4 times and failed, which means and your RSI is still so low. It's not gonna, like I said, this is 3 minutes. It's not gonna stay there that long. Once you see this bouncing and the stock RSI is starting to come back up, the MACD is starting to come back up, the RSI is coming back up. So it all lines up together. This is rising back up. This is curling back green. This is going from 45 to 59. It's going positive. The writing is on the wall. It's time to get out of there. They gave you another. Now, say had you held and thought, oh, we're going to go down past, 104. We're going to break that. It popped back up. If you're still holding here, you're down, but they gave you another chance. They said, okay, we'll give them one more try. It bounced back down again. This is your second chance to get out of there. If you didn't get out here, you're toast. It's gone.
And when you flip, let's say when you flip in your call, do you flip sometimes the same call, the same weekly within the same week?
What do you mean?
Like, do you buy the same contract?
Oh yeah. Okay, so yeah, with this one, let's go back to this. So with Tesla yesterday, I bought nothing but on the put side, 1050s. I was buying a lot of 1050s. The delta was 1, which means for every dollar it moves, I get $100 per contract. I bought nothing but 1050s yesterday. I think I might have bought some 11s too, but 1050 mostly. 11 had 6,000 open interest, 1050 had 4,000, so that was decent. What you don't want to do is buy stuff like this, 761. That's too low. The open interest is not there. The volume is, even though it's in the money, the volume and interest is not there. You want this high, decent volume, decent interest, decent pricing. And the reason why I would say get 1050 instead of 11 has higher interest, but it's the same delta. Why spend $82 on it when you can get the same delta at $32, less than half the price? You're getting the same movement. So if the delta's on Fridays, this is a very good point to make. On Fridays, once as the day goes on, the higher the put is, the deltas are going to bottom out. So pretty much everything will be in the money. And when you're that late in the day, especially once you pass like 12 o'clock, you'll see more and more puts have a delta of 1, or more and more calls have a delta of 1 on the other side. But in this case, all the puts did. So I was just getting 1050. It's much cheaper than 11 and the same delta with decent interest. But what I'll do is just keep ordering that 100 here, 1,000 here, whatever it is, and just keep doing that same put every time. Why?
So even on a Friday, you'll buy the OTD?
I was doing that. Yes, I was doing zero day. But 1050, because I know based on what I see, we're not getting there no time soon. No way. We couldn't even break 1020. And that late in the day, those contracts on a nice $2-3 move, your 30 was at 3,200, 35. It's actually, it wasn't that wide. It's usually about it may be $50 to $100 apart. So you may have the bid at 34 and the ask at 35. And if we're moving fast like that, that 35 is going to turn to 38 real quick within seconds. And once it does, I'm out.
At what point in the day would you stop buying?
Zero.
The same day.
If you're not deep in the money, I would say after 12 o'clock.
Okay.
If you're not in the money. If you're in the money, you can do it till the day is over. But if you're out the money, you want to start going to the next week. You don't want to risk that. It's not worth it. Go to the 17th or 20 or 23rd, something like that. Or even I was doing January's too. Yeah, I was doing January.
I do the same thing. That's my strategy.
Yeah.
Like if it's Friday, I usually go the week up.
Yeah, go to week up. Even from the beginning of the day, honestly, doing what I do on a Friday is risky for the average person. I would recommend just going to the next week. It's the data is crazy. It'll eat away at your contracts. Like I had 980 puts earlier on my other account. I think I made like $300 off of it, but they were worth like $1,000 at one point when Tesla was down to 982. By the end of the day, they were worthless. So yeah, playing with the 0 day it's a gift and a curse. You got to get in and get out within seconds. You cannot let runners run with 0 day contracts. It's designed for you to get in and get out. But yeah, to be safer, honestly, you really want the next week. Like I said, unless you're really deep down in the money, the deeper the better. But yeah, with this rejection, this was I would have got back in this right here too, right at this cross, because you see the stock RSI, it's got to come back up. MACD's curling, RSI's up. So whenever you looking at these crosses, also pay attention to the stock RSI, pay attention to the MACD, pay attention to the RSI, everything lined up together. And when you see that, it's go time. And even this can, I probably would have got out here. I don't even think I would have rolled it back out because I don't want to hit my next resistance. I'm all about getting out before the resistance, getting out before the next support. I don't like holding through these lines. I like to get out in between the lines. That's just me. Some people may like to hold it, you know, that's you. But for me, it's safer to get out in between lines. Your win rate is much higher because here we go here, fake out. They reject it. So you got your call, boom, we got them back down to EMA. So you can, you know, hope and pray. Oh, hope it doesn't break the EMA. The stock price is kind of high. It's testing, and then boom, it actually did bounce. But had it not bounced, you're shot. Because you didn't sell before you got to your resistance line. You know, had you sold here, right in here, you're safe. You know, safe. You might have missed some profit, but that's okay. You can go back in. Go back in off the bounce. But at least secure the profit. Don't try to hold, you know, hoping you get a 200% return. It's very risky. You're gambling. Yeah. But I mean, that's pretty much, you know, this is the game, man. This is the game, guys. This is it. This is the game.